Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Tuesday, the 18th of April. Starting off with the S&P, where we've got that pesky resistance line there from back in August. 4160 is the level. Want to see an end-of-day close through that to give us a journey towards February resistance, just shy of 4200. And then by next month, ideally up to the top of that rising trend channel from back in October as high as 4250. On the downside, not expecting much below 4080, worst case maybe 4030, which is the rising 50-day moving average level. But at the moment, still looking for this market to make further efforts to the upside. Onto the stocks, and a few favourites of the last week have already emerged. First one is one that we have enjoyed over the recent past, CNS Pharmaceuticals. Here we so far failed at the 200-day moving average, which is perhaps not too surprising, but would like to see the shares remain above the old February-March resistance around $2.20. Above that, still got a chance of heading up to as high as $5.50 by the end of next month, so a reasonable risk-reward situation on that, but we don't want to see an end-of-day close back below 220. Next up is Cleanspark, and here you can see that shares have made reasonable progress over the recent past. We managed to hit our first target there around $4. Above that, we're looking for as high as $5.70, which is a September resistance line projection to be hit by the end of next month. So ideally holding above the $4 area ahead of a fresh move to the upside. Moving on to a fresh face, we've got Kineta, and here we've broken recent neckline resistance around the $3.80 mark. Initial target here as high as $5.30 at the 50-day moving average. Above that, I suppose by the end of next month we could hit $6.50, but really just looking for the 50-day line around the $5.40 area to start off while we're above the 380 zone. Moving on to a stock which I have covered quite a lot over the last few days, Presto Automation. Here we managed to gap through the 50-day moving average and close well above it, actually. Pretty impressive stuff, hitting the 200-day line around 450 in the meantime. Current view is that above $3 and above the $50-day moving average area, we're looking for as high as $6.20 by the end of next month, within that broadening triangle backed by the bullish divergence line there from the derived from the lower April support versus the March lows. On to Plug Power, and here the interest is really whether the shares can turn around from current levels in a meaningful way. The plus point here is that we've got bullish divergence. We've had lower lows for April, but the RSI heading higher. That might be enough for people to suggest that, or think that above the $9 area, we could at least head back to post-March resistance around $12 over the next 2 to 4 weeks. Let's see if the shares can step up to the plate. On to the next stock, which is Rackspace, and here another situation where it looks as though we've got bullish divergence coming in. We've got the shares pushing towards the 50-day moving average. That suggests that at least if we get an end-of-day close above the 50-day line around $2.30, the next level up would be up to $3.20, which was February resistance on the way down. But the upside in focus there while we're above recent swing lows around the $1.80 mark. Another stock which is doing its best to rehabilitate itself at the moment is Roivant Sciences. Here you can see that the shares closed above the resistance line we were looking for to break back from January. So normally around the $8.50 level. Above that, and especially above the 50-day moving average, around $7.90. We're looking for the top of that rising trend channel from back in September as high as $12 to be hit as soon as the end of next month. SoundHound is next, and it's been a bit of a rocky ride, I suppose, over the near term, but we're holding the 200-day line there around $2.60, and above that, really looking for as high as $4.50 to retest February resistance on the way down by the end of next month. Of course, you just wait for the 200-day line to start rising in earnest. The 50-day line is already doing that. We're just waiting for that 200-day line to curl up. The good sign in terms of the RSI is that we've had a double bounce off the neutral 50 level. That tends to be a decent continuation signal. Next contender is one that has had decent run in the past and looks like it's going to continue that. We've got just in the run-up to an imminent golden cross between the 50-day and 200-day moving averages. They're around the $2 level, and basically looking for the retest of the resistance that we already hit at the top of that broadening triangle around $4. Above $4, we could head up to $6.50, which is a target derived by the early 2022 resistance line projection, and that would complete a larger triangle. But the real kicker there over the near term is the imminent 50-day, 200-day moving average golden cross. Just a couple of stocks to go now. First one is one that we haven't looked at here of late. It is Toro, and obviously not a great picture on the left-hand side of the chart, but it looks as though the shares are trying to break through neckline resistance. That is about nominally around the $3.15 level. Above that, on an end-of-day close, which is what we got yesterday, we're looking for the shares to fill the gap up towards the $8 area as soon as the end of next month. But the upside only really valid while we hold above the $3 zone. On to a rather more conventional bullish-looking chart. Here we've got United Biotechnology, and here we've got that U-shaped or saucer-shaped reversal. Very impressive one indeed, and basically breaking neckline resistance around $1.85. Above that, looking to fill the gap up towards the $4 area as soon as the end of next month, but certainly sitting pretty there above the $1.85 area, which was that neckline break of last week. That's it from me today. More updates tomorrow.